You're still watching TVC News at 7. Let's turn our attention to business as part of an effort to create an enabling environment for MSMEs. The Lagos State government is hosting the 2023 Lagos Food Festival aimed at showcasing the food potentials to the local and international markets, as well as stimulating investors' interest in the business. State Commissioner for Agriculture, Ms. Abisola Ulusonya, at a press briefing in Lagos, revealed that the event will hold on 10th of December 2023 and will attract over 10,000 participants. Ms. Ulusonya says this will allow food vendors to network among stakeholders, exchange information on products and services available in the global markets, as well as create direct and indirect jobs for value chain anchors. Actors. Speaking about the festival, she affirmed that the festival has attracted more participation from vendors in the food and entertainment industry, with testimonies of improved sales during the event and opportunities secured from the linkages thereafter. Bring that to you in our subsequent bulletins. Nigeria's 27.5 trillion renewable budget for 2024 has been presented to the public. The fiscal authorities made the presentation hours after it was delivered to a joint session of the National Assembly by the President. They described the budget as realistic and implementable, with more focus on revenue than spending. Lara Falanyo reports.
A public presentation of the 27.5 trillion naira renewed hope budget for 2024. This is coming shortly after the proposed expenditure plan was laid before the legislature. The fiscal authorities say the figures contained therein are realistic and the document implementable. This is against the backdrop of the strategy being adopted this time around, which is alternative revenue sourcing rather than borrowing to fund the expenditure.
This budget is based on assumptions which are realistic. It is based on projections which I think the average person would say are reasonable. So therefore, it is something that we can expect to be successfully implemented.
They believe a lower deficit from what obtained last year shows a huge direction change from limitless borrowing to better revenue generation and expenditure management. The focus is on boosting the tax to GDP ratio from below 10% to 17% in a few years, a target that must be met to cut down on borrowing.
The projected level of deficit is partly attributable to the proposed salary review of federal workers, for which provision has been made, increased pension obligations, and increasing interest rates, which have caused higher debt service obligation.
We expect that in the course of 2024, as some of the policies begin to come to fruition, we may indeed have need to come back with a supplementary budget to reflect the full scale of the ambitions of the new administration.
The renewed hope budget for 2024 has a target of job and wealth creation, macroeconomic stability, poverty reduction, improved access to social security and human capital, amongst others. Education, health and security are some of the sectors with the highest capital votes. Lara Falanyo, TVC News, Abuja.
A group of experts converge on Lagos to discuss and chart a way forward for the economic revival of Nigeria. The meeting, which was put together by the Nanyang Technological University Singapore and NTUSBF Center for African Studies, attracted key economists from Nigeria and abroad to discuss the need to restore the economy to the path of growth. Details in this report. Back to growth. Priority agenda for the economic revival of Nigeria was the theme of this gathering, a clarion call to set priority agenda for the revitalization of Nigeria's economy by engaging in targeted policies for the growth and development of the economy. The discussion kicked off with an emphasis on the urgent need to establish a priority agenda for Nigeria's economic development.
There are four critical factors, in our opinion, that are likely to determine the economic performance of Nigeria over the next 10 years. Those would be price of oil, fiscal stability, infrastructure, and investor confidence. although there is very little Nigeria can do about the global oil prices, it can certainly take steps to improve fiscal stability, improve infrastructure, and restore investor confidence.
What we're all waiting for is additional articulation of policies to increase local production, drive inflation, expand the skill base and the capacity we have to produce locally so that we actually start growing the economy again.
One of the key points raised during the meeting was the need for the government to focus on diversifying Nigeria's economy. It was widely acknowledged that the over-reliance on oil revenues had exposed the country's vulnerability to global oil prices fluctuations, while emphasizing on the need to stimulate growth in non-oil sectors such as agriculture, manufacturing, and technology for economic resilience and sustainability.
If population is growing by 2.5%, and by the way, 2.5% is the lower estimate of population growth. Nigeria's population numbers, depending on who you believe, grow between 2.5 and 3.2%. So the mean number there looks like about 3%. So you cannot be doing half your population growth in food production growth and not expect to run into some very, very serious headwind.
The policies are there. The policies are world-class. The governance system is there. We are well structured from a governance standpoint. How do we use that system to meet the needs of those people is where we still fail or where we are struggling with, regardless of what political party or dispensation is in place.
Key areas of recommendations at this forum includes diversification of the economy, domestic resource mobilization, the need to create favorable business environment, enhance access to credit, and investment in human capital development. Let's take a look at equities trading for today. Market sentiment were bullish today as trading recorded massive gains, causing all share index of the NGX to appreciate by 0.08%. Unity Bank PLC, Name-It International Pharmaceuticals PLC, as well as Ikeja Hotel, topped the table of listed companies that appreciated the most in price that ended the month of November, followed by Omatech Ventures PLC, then Thomas Wyatt, Nigeria PLC, Sono Assurance PLC led the list of losers, trailed by UAC of Nigeria, then MC Nichols PLC, Capri Nigeria, and Real Exchange PLC. Asians shares started the last month of the year on a cautious note after recent strong gains, though growing expectations that Europe and the US are poised to cut rates should help ease pressure on local currencies and central banks. MSCI's Broadex Index of Asia Pacific shares outside Japan fell by 0.5% after a surge of 7.3% last month, the most since January. Japan's Nikkei was flat, having also jumped by 8.5% in November in the best month in 3 years. Chinese blue chips dropped by 0.6% and Hong Kong Hang Seng Index fell 0.4%. The dollar index hovered near a 5-session high of about 103.28 against its pairs, drawing some support from a sliding euro overnight. That came after a staggering loss of 3% for November, the worst in a year, while euro rose by 0.2% to $1.09 after tumbling 0.7% overnight to a one-week low of $1.08.